Welcome, everybody. I'm so glad you're with us today. We have got some important information that must be discussed. There's no doubt about it. The economy, the things that are taking place in the banking world, all of it is changing rapidly. And so we've got a special guest with us today. No question, an expert. And that's Colin Plume from NobleGoldInvestments.com. Colin, how you doing?
Hey, Pastor Paul, I'm good. Just great to be here. As I mentioned, I just celebrated. My wife and I celebrated our 10-year wedding anniversary, and so that's really beautiful. But life couldn't be better. So nice to be here, and always appreciate it.
Okay, it really is. So I was looking at the different things going on, Colin, and I mean, you guys have been really busy at Noble Gold with the inflation and the interest rates. I mean, people got to get some assets that they can depend on. I mean, am I right?
Yeah, I mean, it's average home mortgage right now in the sixes, low to high sixes, depending on where you are, credit score. Housing prices have not fallen enough to really compensate that. So that the real estate market's been hurt very badly by these high rates. It's just too dramatic of a shift for anyone to really jump in. So the market's really slowed down a lot. New home building is really kind of a grind. A lot of that is built on debt. Going out to the market and getting debt is getting harder, even though rates are higher. You'd think it would be easier in a way, but it's actually gotten harder. There's a number of factors that have driven the market, and obviously speculation about the dollar, the BRIC countries coming out saying that they want to go away from the dollar, France doing the same thing. We're too reliant on the dollar. So you have this real push for countries to start using different currencies, and they're trying to divest from the US dollar. And so it's caused a lot of turmoil here in the US, and our dollars reacted, and then gold obviously has reacted positively to this news. And unfortunately for our business, our dependence on debt and the way we've ran the country is actually a positive thing for gold, sadly enough. So a lot of times the bad news is good for gold, and so that sort of works that way, unfortunately. But we're in a predicament here, and a lot of things are happening out there in terms of the news and what our government's trying to do. There's the student debt situation that the Republicans are trying to fight against. So it's just not a good time to try to add more debt and not get our books in order as a country.
Right.
And that's exactly what unfortunately this administration is trying to do.
Yeah, I mean, here we go. Kevin McCarthy wants to meet with President Biden. They got to raise the debt ceiling again,
right?
Which is driving me insane. Yet they want to cut some of the, entitlements, and there's the rub. What we need to do is cut some of the entitlements and not raise the debt ceiling. Okay.
Yeah.
Get it going in the right direction. But what's your thoughts? What do you think? I mean, they're probably going to raise the debt ceiling and maybe trim some stuff that can start heading in the right direction. Will the Democrats be willing to do it?
Well, like what you said is exactly true. If we're going to make some budget cuts, then maybe we don't need to raise the debt ceiling. But what ends up happening is we're always doing this deal at the 11th hour, and we just never have a time to catch up. And then we're always just it's a never-ending cycle of how many times we have to raise the debt ceiling. So the student debt situation, us trying to give some kind of reprieve to people on student debt. Unfortunately, we're just not in a position right now to do that. And so the Republicans are just saying, listen, let's not focus on that right now. We have some bigger issues to deal with. And let's try to bring some things in order. Let's get our books in order a little bit. So we don't always have to have this conversation about the debt ceiling. These conversations, every time we raise the debt ceiling, every time we hit another trillion in debt, it just sends a message to the world that we are not as strong as we used to be. We're not a strong country. We're not a strong nation in terms of financially. And that gives people a lot of pause. And that's why you're seeing the world move in this direction of trying to get away from using the dollar as the major currency, and that hasn't shifted. I mean, they've been talking about this for a long time, but now we know inflation is 6 to 8%. We know interest rates are at these high rates, and we know our economy is stagnant. And this is exactly what happened to Bretton Woods, and this is why the pound is no longer the reserve currency. They had a similar situation, that they had a stagnant economy, they had high debt, and the world spoke and changed the currency to the dollar in 44. But who's to say that's not going to change now? And we moved into something else. And that's why, locally here in the U.S., you're seeing a lot of states. Texas came out with their a law to potentially have their own currency that's backed by gold. They have a big depository in Texas they built a few years ago. So they're looking to divest from the dollar too. And they want to get some of their assets and their citizens' assets in Texas invested in something else besides the dollar, because they see what's happening. There's been 3 or 4 other states that have passed legislation where they want to have more people, using gold and silver in the day-to-day, paying taxes in gold and silver. You look at a state like Utah that's really been pro-gold for a long time. They've been receiving money in taxes you could pay stuff, tickets or taxes in gold. And they've had that for years. Just imagine when gold was at 1,200, now gold is sitting close to 2,000. That state of Utah is in such a better position by accepting gold than accepting anything else.
Right.
So there is this big push to go back to having gold being the reserve currency and having it partially backed by gold. And I think that's where a lot of people want to go. We want to get back to sound money principles. The hard thing is that you have the politicians that aren't talking about it, at least near the White House or in that realm. They're not really thinking of the reality of this. They're just focused on the day-to-day problems and just kind of pushing the debt to the street. And so that's a big problem for us as a country.
Now, after this Silicon Valley collapse and these runs on these banks, it looks like we're going to see the big banks gobbling up a lot of smaller regional banks. Do you see a lot of mergers coming in the next year or two?
Yeah, I mean, I don't think anybody saw UBS, having that situation with UBS happening. There's reports that there's about 400 or 500 other banks. There's about 4,700 banking institutions, credit union institutions in the country. There's another 10% that are in a similar situation as SVB, where they bought a lot of those bonds at the wrong time. They're in a similar situation. A lot of them have loans out there that they may not be able to cover. So you do have other banks that will merge this year. That's basically looking at about a 10% number. So I think those are going to a lot of those will get swallowed up by bigger banks, which I don't think is the greatest thing. I don't like any kind of monopolies in anything, but obviously in banking, you don't want less options. You want more options.
Right.
So it's not a great thing to have all these banks sort of get swallowed up by these bigger banks. And a lot of people love the service at some of these smaller banks. They love the idea of going in and knowing their banker and having that personal relationship. And as you get closer to these bigger banks, that relationship is gone. You just become a number. And unless you got, millions or hundreds of millions in the bank, they don't even really take your call, unfortunately. So it's not a good thing for the consumer to have a lot of these small banks sort of get swallowed up. But at the end of the day, if their books aren't right and they've invested in a lot of these bonds kind of early, which, a lot of the securities that they invested into were pretty common. It's just SVB and some of these other banks were just so heavily vested there. They just had too much. They weren't diversified, which is something that I always talk about as really being important. That's why I always talk about gold as being a diversification,
right?
And not having all your eggs in one basket. It's really important to be diversified and have these different assets. Even as an institution like a bank, you don't want to have too much of certain assets. And we know banks, they're taking your money, for every dollar they lend out $10 or they're investing $10. So they have to make a return. Mm-hmm. But they want to make sure that we got to make sure that the returns are in places that make sense. Now,
but there's a couple of things happening, and I noticed this. And is let's say you've got money you want to put in a CD. these smaller regional banks, they will right now they'll give about 4%,
Right.
maybe a little more. But your big six, they still want to stick around the 2% range. I mean, so that makes you nervous.
Yeah.
I understand the little guys want to pay more because they got to get some more business, but are they more vulnerable? So,
yeah, and I think that's the scary part about those numbers is that, you know, getting that kind of return is like, oh, it seems really great. You know, I've even got calls recently from banks offering, they'll offer 3 or 4% for a short, the big ones for a short amount of time.
Right.
But yeah, I'd be nervous at a smaller bank, you know, offering a CD at those kind of rates. And obviously you're right. They're using it because they need money to go out there and borrow and lend and invest. But it does make me a little cautious. And then bigger than just, you know, what's going on just with their banks and you know, bonds and what's going on is this commercial market.
Oh, it's a mess.
The commercial market, and I've been saying it for years, and I've talked about this a lot, as I was in commercial real estate before I got in precious metals. I was in it for almost 6 years. So I have, you know, intimate knowledge of sort of how the lending process works and sort of how that was backed. And with these high rates, there is, you know, hundreds of billions of dollars in debt coming due this year. They're not going to be able to underwrite this debt because depending on what it's in, I mean, the office market is evaporated. I mean, it's basically
nobody's renting office space to put people in to drive downtown. I mean, when they can work at home, there's no way.
Yeah, just especially small business owners, which are obviously a big driver. You know, small business owner, it doesn't make sense to have an extra $2 to, you know, let's say $10,000 a month in office, you know, depending on what they're paying. You know, they're going to use that money for marketing. They're going to use that money for employees. They're going to use it for whatever they want, especially if everyone's just working on the computer anyway.
Right.
So, you know, I think that we see this big bubble happening in the commercial debt. And who's going to who's going to line up and be able to loan some of these big institutions. And, you know, there's some articles out there saying that the life insurance market's probably going to start jumping in potentially there because obviously that's part of their business model is lending out. And that's a big part of their business. But at the end of the day, if they're going to give market rates on percentages, we're talking in the 6s right now, maybe in the high 5s. Whereas I know, you know, 3 years ago, you could get office debt, you could get apartment debt, you could get retail debt in the high 2s, low 3s. So now you're coming a few years later, and you know these institutions, they have to underwrite it, so they're going to have higher vacancy than before. They're gonna have this higher rate, obviously, and are these landlords going to be able to continue to pay off this debt and assume a lot of this debt? So we're in a really
it cascades. In other words, if the landlords can't get the renters, and if the rate, but they still owe the bank don't want to take the building because it's 40% vacant. So, but yet the bank needs to have the payments because they've lent out money to other institutions. And this is the danger of why in the world would you raise interest rates when this is going on? So the only stable thing I see, to be honest, it's not the stock market, because I think it's going to take a bad turn in the fall. It's not the housing market, because the interest rates are slowing down. It's gold and silver. If you look at the big picture, it's the only thing that's stable, really.
Well, and the demand hasn't subsided. And, you know, I think that's the thing that people are looking at is like, where do I put my money right now? And you know, we just talk about all the things that are happening out there. And you know, these situations are obviously with our economy are quite scary, you know. Also, the real estate market just employs so many people. I mean, that's the other thing that's so difficult with that. And you're right. The banks don't want those properties back, right?
No, they don't want them back.
No, they don't want them back. So I think what's going to happen, and this is even more scary, I think what we're going to see happen is they're going to turn these loans into interest-only loans. That's what I think that they're going to do this year.
Wow.
I mean, I think that's the only way. If you think about it,
you mean give relief on the principal and just make?
I think they'll push. They're going to push.
To defer. They're going to defer interest.
And that would bring some of the payments down. So if you're going from a 3% note to a 6% note, now you're in a position where you just go IO. Yeah. I think that's what's going to end up happening. Maybe it won't be talked about out there, but if a bank's in a situation they're going to get a building back, or they can go IO for 2 years
and ride it out for a little while, they may do that,
and hopefully interest rates drop. So I think that's what's going to happen. Yeah. And you're seeing some interest-only loans start to come back on the residential side too. You're starting to see that, where they're starting to offer that because people they can't afford both. They can't afford principal and interest on some of the.
No, you can't. So what happens? It's the same thing that's happening here in the villages. For the last 3 years, they were selling. If you put your house up for sale, you would sell it in 48 hours. There'd be 20 bids on it. Okay, right. Insane. So the property values shot up off the charts, like 33% increase in property value. It was just insane until now. All of a sudden, people want to buy the house, but the interest rate's 6-7%. And so the seller has to drop the value price down because the buyer has to pay so much interest. So it slowed everything down. That affects all these construction workers and these guys building these homes. So it can put things in a jam. But back to again, gold and silver.
Gold and silver obviously looking.
If you got a 401k, where do you want? Can you roll part of it into gold and silver, or do you have to roll it all? What do people need to do?
No. As long on a 401k specifically, if you're not employed there, if you're not working at that company, or if you're over the age of 59 and a half, you can roll a portion or all of it out. Typically, a 401k provider, if you've left there, they're going to want you to move the money out of there regardless. So what happens a lot of times is, like, let's say you come to us and you got 50,000. You go, well, I want to put 25,000 in gold and I want to move 25,000 and just see what's going to happen. Maybe I'll go back in the stock market. We'll typically roll all that over, kind of get you set up with a custodian, do all the paperwork to make sure everything's approved by the IRS, and then you put the dollar amount that you want into
where you want it.
Yeah, where you want it, and we assist you with that. And the great thing is, this is something that I always think about, but it's proving to be more true than ever. One of the things is that when you do an IRA with us, the metals are stored in a depository. It's segregated storage. So you have your own shelf. And I go there. I think I've told you this. I go there a few times a year. We have
just to look at it. Yeah.
I go in there and I do an audit. I do a blind audit. So I give them 200 receipts, give or take, and they just pull the metals out and I count the ounces of gold and silver. It's really fun, actually.
Yeah, making sure that what's supposed to be there is there.
Correct. Yeah, and it's always there. And I always joke with the vault people that there's a few extra ounces in there. They right. Especially in gold. But yeah, so I do this audit. But the one thing I always think about, especially right now with the value of gold skyrocketing, is we have this rate, $150 a year for storage. It's a flat rate. So you could have $50,000 in gold there, or you can have $2 million in gold there, or $3 million, and you're going to pay $150 a year. There's nothing like that where you could hold that much value in an account for that price. I mean, it's really unbelievable. Yeah, it's a flat rate. So it's like, you buy your gold, we help you, you buy it, we ship it, and then you're sitting in this gold. You could sit in there for 10 years. You're paying $150 and then $75 for the custodian. So you're paying $225 a year. Indefinitely, as long as they don't raise their fees, which they haven't in many years. But you can hold $1 million of gold for $200 in account storage, and it's insured, it's segregated, so it's really a fantastic thing to hold a lot of value.
Is it federally insured, just like a bank is with the FDIC?
No, because the only assets that are insured are cash, right? FDIC insurance, and that's below $250,000.
Right.
Our metals are insured. We use IDS Depository in Texas and Delaware and Canada. They have a Lloyd's of London insurance policy, and so it's an all risk policy. No matter what happens there, theft, fire, whatever could happen, you're covered.
Some dude steals $15 million worth of gold in the Toronto airport. Who covers that?
Yeah, so that maybe Lloyd's could be on that. Obviously that is quite interesting. How there's the details on that. Maybe they have a suspect and they're not trying to release too much information about that. But But yeah, I mean, that is important to have that insurance when you're moving these assets around. And so we have insurance, the custodian has, we all have, and there's multiple companies involved that make sure that you have that insurance in place. But yeah, it's always covered. And, since I've been doing this, I've been in the business for almost 14 years now. We've never had any problem. Never had an issue. We ship millions of dollars to people's doorsteps, store it. We've never had an issue. So
now I know you're giving away this 5 ounces of silver, beautiful piece, a beautiful America coin to those that qualify with a gold or silver IRA. Is that right?
Correct. Yeah, that coin is my favorite. It's the America the Beautiful coin.
America the Beautiful.
We ship that. They only make between 20 and 30,000 of each park. So on the other side, there'll be. So that one is what is that?
Let's see, who is this?
Who is that? So
this is Rhode Island.
Oh, Rhode Island. Okay. So on the back, they either do a national park or a national monument. They have like an Ellis Island one. They have all these different beautiful falls. So and that coin that you have, they're only going to make 30,000 of those.
Wow.
So they're and if you compare that to other coins that are out there, like the Silver Eagle, they make 25 million a year or something, some big number.
Yeah.
So that's actually a pretty limited supply.
Yeah, it's a limited. So it's a collector's item because it's a limited supply.
Yeah.
Can people just call and buy coins like this from you?
Yeah, absolutely. Those are hard to get. I will tell you, those coins are hard to get. I remember 5 years ago when we could get a lot of those coins. They're harder to get now. Yeah. But yeah, absolutely. If someone wants to buy the 5 ounce American the Beautiful coin, they can buy it from us and we'll ship it directly to their.
Okay. Because some people may say, well, I don't have say there's some folks watching right now and they don't have a 401k, but they just got an inheritance, or they just got an insurance settlement, and they're thinking, do I want to put all that cash in the bank, or do I want to put some of that in the stock market, or should I put 30% of it in gold and silver? They can call you and you guys can walk them through.
Absolutely. Yeah. And I will tell you what happened with the banks. A lot of people did do that because they just didn't want to have all their money tied up in the institution. So they bought gold and silver from us. We shipped it to their doorstep. And then later, if they need the money, they can sell it. I mean, the coins and bars we sell are all bullion coins and bars. They can sell it anywhere. But they want to sell it back to us, they can ship it back to us and we'll buy it back from them. So it is a two-way street. It is liquid, and we can always help them if they do decide they want to liquidate their metals. So
now, as we said, we want to talk. We've talked a little bit about the housing market, and we talked a little bit about the commercial building, but also the future with the green initiative going on. There's still a lot of talk that the electric cars is still going to be the future. What's your thoughts on that?
Yeah, I mean, I think there's so much movement in this direction, and I think as gas prices, it's weird about this is as gas prices come back, people talk about it less. But when it was, gas was in the $6 range, everybody was talking about it.
Right.
It was like the number one conversation. So it's like, we're not in a position where gas prices are going to go. They're not going back to $1 or $2 again.
Yeah.
We're sitting in like the high 3s, 4s, probably most of the country. So we're trending in a direction. I mean, if you go back 6 or 7 years, it's probably doubled. So if you go another 5 or 6 years, that means 6 is going to be the new 4, right? In terms of prices. And then we'll probably see $8 or $9 gas, which, in Europe, that's not uncommon. I mean, Europe's gas prices have always been 50 to 60% more than ours. And that's historically. So I think as we go back to 6 again, people will talk about electric cars again. So I don't think it's going anywhere. 13% of the cars that are sold are electric right now.
That's huge. That's a big number.
Yeah, and they think by 2035, 2036, it'll be 60 or 70% of the cars. Wow. I mean, some places they want to go farther. I mean, Europe wants to go farther, which is why you've seen a lot of these EV vehicles pushed. And we didn't get a chance to talk about it, but a lot over the last few months I've been talking about is platinum. And I was telling people about 90 days ago, platinum was sitting in the 940 range. Now we're in the $1,100 range for platinum. Most people think it's going to hit $1,300 because what happened was with these electric vehicles is that palladium was the preferred metal for many years, and you saw the price skyrocket. Now it's shifting back to platinum. So you're seeing platinum prices really skyrocket because they use platinum in those catalytic converters for those electric vehicles. So we're starting to see that dynamic of platinum, and platinum is not easy to find. It's actually out of those four metals, it's the most rare, gold, silver, platinum, palladium. So platinum's really been moving up. So people that bought platinum, about 60, 90 days ago are pretty happy with the prices.
Yeah.
And obviously gold and silver have been moving also over the last few months. So,
and I would think that in the next 18 months or 2 years, I guess we're going to be going into this now election cycle. I don't see the stock market really going up a lot. If anything, it may go down another 2,000-3,000 points, and the housing market's going to be stagnant. And so I think precious metals is probably where you want to be, folks. Just looking at the landscape for the next couple of years. But you're the expert.
I think the problem with the high, in my opinion, I think interest rates will come down at the end of this year. I've been saying
good. That'd be great.
I don't know if they're not going back to where they were, but I do.
Please get a hold of Jerome Powell and say, "What are you doing?" I saw Elon Musk even say, "The last time we raised rates this fast was 1929." Can somebody tell Powell?
Yeah. Was he around? No, I think interest rates at the end of this year, I think they pulled them back a little bit because I don't think coming into an election year that they're going to want to have interest rates this high, and even a little bit, even 100 basis points turn in the other direction would really help the markets dramatically.
Really would.
Also give a lot of confidence. Just employers too. Employers are nervous to hire right now because they don't know how the next few years are going to go, and so they're cutting back. We've seen huge tech layoffs,
unbelievable.
The amount of people that they've moved away from. So I think that we need a little confidence, and I think lowering interest rates early at the end of this year will do it. And I think they are going to do it. I wouldn't be surprised if it's the November, December meeting is when things start to shift. So I think we'll have a little reprieve, but overall, I mean, if they lower rates, that means that sort of they're expanding the money supply. When you expand the money supply, that's typically when gold and silver do really well. Yeah. Will we do a quantitative easing like we did in 2009 and 2011, 2012? Are we going to do QE1, QE2, QE3 like we did? If we do that, then we're looking at gold, potentially doing 20-25% again.
Oh, it'll shoot up, right?
It'll shoot right back up. So it is interesting that gold has performed so well because the dollar is actually strong. It's usually not this way. And it's really because of the loss of confidence in our dollar and also our banking system that's pushed people into gold. It's an unusual reason to have gold flourishing right now. You would typically see, the dollar, being inflated, and you see these numbers, but the dollar's actually been strong and gold still has performed very well.
So, folks, Colin Plume, of course, has a great company, and that's noblegoldinvestment.com. And you can see it, right? The ticker's been going the whole time we've been talking. You can go to their website at noblegoldinvestment.com, or you can pick up the phone and call one of his associates at 877-646-5347. And what I love about Colin is the honesty and the fact that, you'll tell people what they call, hey, I don't know what to do. Here's my situation. And you guys will give them some good advice. It's usually to diversify and not.
Yeah. And I will tell you this, and not a lot of gold companies will tell you this, but we turn away more business than we take. I mean, we
unbelievable. I heard you say that before. I'm like,
yeah, it's true.
You're the only guy that does that. But
well, but listen, we're a family business, and we if someone's nervous and but we tell them like let's take your time. Let's take your time with this. Let's make the decision when you're ready. Because we know this is a long-term relationship. A lot of my sales staff, a lot of people are young. They're in their 30s and 40s. I mean, they're going to be doing it for the next 20, 30 years. They don't want to be in a position where they said they moved too fast or they didn't get their question answered. Like they want to be around for a long time. So they're building relationships the way that I want to build relationships with clients is that they have their best interests at heart and they're going to give them good advice and talk to them and it doesn't always work out, and sometimes it does, or maybe it takes a year, whatever the case may be. But most of my staff is thinking like, I'm going to be doing this for the next 20 or 30 years, and I want to make sure I do it right. And I think that's what separated us from the industry. It is an unregulated industry, and so you got to be careful. You got to check reviews on companies. You got to look at them closely. And I think, for my word of advice, if anyone's rushing you into a decision, take a step back. Take a step back, think about it. If their offer is too good to be true, if they're saying they're going to give you, we've seen people offering $20,000, $30,000 in free silver. That money's coming. The money is coming. If they're offering you something, the money's coming from somewhere. And I've heard these horror stories where people jumped in too quick and then realized later they got charged, an enormous commission.
And this is something I know a lot of people are. One reason they're attracted to gold and silver and precious metals is the government doesn't regulate them.
Yeah,
the government regulates the stock market and the currency values and the banking industry and all that. But the precious metals market, the government has no manage. They're not managing it. They're not scrutinizing it. And it's good in a way because it lets you guys just do old fashioned free enterprise business with people.
Correct. Yeah, it's definitely a pro and a con. I think the pro is that if you have a company like ours where we're regulating ourselves and we know what we're doing and we've been around and we source our metals from a lot of different places. We get unbelievable pricing. And then doing right by the client because we're going to be in it for the long term is something we really focus on. So this is how we built the company. We'll continue to build it and be around a long time. But for anyone that wants information on how to invest in gold, silver, platinum, palladium, give us a call, 877-646-5347. Talk to a live person. We do have live real people.
No, you don't have bots?
No bots. No robots. And talk to a real person and talk to someone and build a relationship with somebody at Noble Gold.
There it is, folks. Go to www.noblegoldinvestment.com. That's noblegoldinvestments.com, or pick up the phone and call them at 877-646-5347. Colin, appreciate it. I really do appreciate all the good work you're doing with families and with people, and also being a friend of our ministry. It's making a difference.
Yeah. Looking forward to seeing you hopefully in a few months out here. So.
All right. We'll see you. God bless you, Colin.
Thank you.
Folks, we'll see you again. Don't forget noblegoldinvestment.com.
All right.